Hi everyone. So welcome to our Pew Prime webinar today. So today's topic we're going to talk about what kind of trading strategy that we have, and we're going to discuss about 4 different types of trading strategies, which are commonly used and quite famous in the market. So this session is brought to you by Pew Prime, and my name is Ryan. So before we start, allow me to read out this disclaimer. Okay, so tonight sessions is intended for educational and informational purposes only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Pew Prime and I, hosting the session, are not liable for any losses or damages resulting from the use of the information presented today. Participants are responsible for independently verifying information and considering their own financial goal and risk tolerance. Okay, this will be the disclaimer for today's session. Without further ado, let's begin. So yeah, these are the 4 trading strategies that we're going to cover, namely scalping, day trading, swing trades, and position trading. So we'll discuss briefly how can we execute it, and also we'll discuss the advantages and also the disadvantages while adopting these strategies. First of all, is the scalping. So scalping is almost to say is very suitable for beginner, because I'll say mainly just rely on the technical analysis, the TA. So we just look at the chart, and then we look for signal, and then we execute a trade. So the time frame for this strategy will be just 1 minute to 5 minutes. The goal for this strategy is just to capture those small price changes in the market, and also you can make multiple trades in a day. And in this kind of strategy is quite challenging if you are a beginner, because this one will require you to make quick decision in a fast-paced environment if you trade those very volatile asset classes. Okay, and besides that, this one also require you to have a good condition if you want to adopt this kind of strategy. Because this one only we will take like roughly less than 100 pips per trade. So if you want to adopt this kind of strategy, right, you better to choose those asset class, those pairing that have a smaller spread, so you will not eat out your profit. And also bear in mind to keep to trade on the pairing that has a higher volatility, or else you will just open a position and then just the volatility will be just between few pips, and it's like a waste of time. So there are some of the pairing that has a high volume as well, like gold, and then like GBP, and then EU pairs. Those are the pairs that are good in adopting this strategy. So how can we do it? So we'll look at the gold. Because I guess gold will be the most famous asset class for everyone here. Everyone look at gold. So my trick is like this. So before you get into the minute charts, right, I will just look at the 1 hour chart first. So I'll look at this bar, and then I'll see what direction this asset class is moving. So for the case now is the gold. So we see this, because now it just started, this candlestick just started, so the direction for the gold is not obvious. So we bear in mind it's now maybe a bit of sideways. But if you look at 3 hours before, you have this kind of like a bearish engulfing. So we can guess maybe the gold is moving on a bearish momentum. So after that, we move into a minute chart. Okay, now you see here is another bearish engulfing. Yeah. So what we can do is maybe we can open a short position. Okay, so let's say if you open a short position here, and then we can set a tight TP. Okay, this is also very important because this is scalping. We just aim for a small profit, so we have to have a very disciplined attitude. We have to set a tight top stop loss so that we can protect our capital, and maybe we can eat up until here. So from here, right, roughly will be about less than 100 pips, and then the losses will be about 120 pips. This is like an example lah. And also, if you are very good in the candlestick pattern, and then now this is forming. What is this? This is like a morning star candlestick pattern. So if you are you know about this candlestick pattern, you can actually open a long position here. Okay, and then you can see maybe there's a very strong resistance level at this point. So you can maybe open this position and then you can TP here, and where you should set, maybe you can set your stop loss around here. See, if let's say if break below here, you'll be like a bullish trend already. It's like a trend reversal. Yeah. So the ideal behind the scalping strategy is you spot those signal, and then you can fast in, fast out, just earn a few pips, like 20 pips, 50 pips, and then you get out from it. The goal is you can make multiple trades in a day, and then you can accumulate those small profit also, and then make it into a bigger profit. Okay. Like I say, because this is like a very short-term trading, so it is very fast turnover. So the advantage is this kind of strategy allow you to change your mind, trade faster in a fast-paced trading, especially sometime when the news came out, like maybe tonight the FOMC going to announce the interest rate decision. So if you want to trade on news, but bear in mind this is very risky, because really anything can happen in the market. We never know. We can never guess like 100% correct what direction the market will move, right? And also this kind of strategy required you to set a very tight stop loss. So in order for you to control your losses. So before you get into a new asset class, when you are not familiar with the market, and also when you are new, you want to test your strategy, you can always start with scalping, and then you do your back test, you see what kind of strategy you should use, and then you can add on with a few technical analysis tool, namely MACD and then RSI. You match up a few, and then you can develop your own strategy at the end. And due to this tight stop loss order, this will lower your risk exposure as well. And also because the time that you open this position is very short, it's just up to a few minutes or just within hours. So your risk that exposed to this market is minimum. And it is very flexible for you. So you can trade whenever you want. You don't need, it's not so time consuming for you. You can, just trade and then make some profit, and then you say you can call it a day, and then that's it for you. And the disadvantage for this strategy will be it will be a very high transaction cost due to frequent trading, because we know that we have spreads in with all the asset classes, right? So let's say if you're trading the asset class with like 20-30 spread, and then you make like a 10 trades per day, so it's already about like 200 and 300 pips. So this is like a huge amount for you. And it can be stressful, because if you want to adopt this kind of strategy, you will opt to those very volatile asset classes like gold, like GBP USD. So if you zoom in to the smaller time frame, you can see the price is like, very fluctuate, very volatile, and then sometimes it is hard for you to catch up. But also bear in mind, if you use this kind of strategy, you don't be FOMO. FOMO is fear of missing out. Okay, so just when you spot this very clear signal, and then you are very comfortable to go in, and then only you open your position, or else you can just wait and observe and monitor longer before you are confident in the trade. And then also this kind of strategy is quite time consuming. You are not saying like, because you can just trade whenever you want, but sometimes if you want to be, let's say, a full-time trader, or you just want to when you have position in your hand, so you have to keep monitoring the markets. It cannot be like other kind of strategy, like when you spot this good position, to open it, and then you can leave it for a few days or even months, and you don't need to have very you're not required to keep on monitoring the market in every minute, every hour. So the time consuming here is about this. When you open a trade, we don't know what's going to happen in the next seconds, in the next minute, so you have to keep watching it until your position is closed. Okay. Moving on is this day trading. So I would say day trading is very similar to scalping. Why I say that is because it is also very much rely on the technical analysis. So for you to spot this signal, and then but the position for you to hold will be longer. So maybe you will trade lesser, but we have to keep this position within the day. Okay. We want to, the goal for this is to capture a bigger trend. So maybe for scalping, you just aim for like 50 pips, 100 pips. But for day trading, if we spot a good chance to open a position, we would, hopefully we can capture a bigger trend, but we keep it within a day. Okay. But this kind of strategy require you to at least have a bit of knowledge, a bit of understanding to the market, because if you open let's say a position for half a day, and then some news hits, and then you have to know that this news whether will it have an impact on the asset class that you trade on. Like let's say you trade on the dollar, and then while you're holding a position, and then you have the news to come out and say the chairs of the Federal Reserve come and say something, and then it's going to have an impact on the dollar. At least you have to have a certain knowledge on what kind of message will have an impact on what asset classes. Okay, so we will have to use a longer time frame for the chart, and also you can trade on the news. So for example, just now we just use like a 1 minute time frame, and now we can use, let's say, 15 to 1 hour. It's the same. So let's say just now early on, I spotted this evening star, and then this happened. So hold on, let's say, yeah, maybe I spotted this, and then I think, oh, maybe this one is like a head and shoulder pattern. And then double check with my signal, I see this one is like an evening star. So if you are familiar with a candlestick pattern, we know evening star is like a bearish signal. So maybe I spotted this earlier, and then I open my position here, and I want to do a short. So maybe I can set my stop loss here, maybe a little bit buffer after the tail. And then because it is like a head and shoulder, right? So maybe I'll take my profit about here. So you see the the profit will be about 400 pips, and then you minus out some a bit of the spread. But this one is not really a good trade, because the the ratio for the stop loss and the TP be quite similar. For me, I always go for at least 1 to 1.5. So I have that 50% more of the TP as compared to my stop loss. So for me to make sure that, you know, throughout the years, I can make money from my trades. Okay. So this is the ideal behind this day trade. And also bear in mind, because I'm using like 15 minutes, so I'm not sure whether how long it takes for this price to form. You know, it maybe just take like 1 hour, maybe it takes like 2 hours. So bear in mind that I don't want to hold this position and then I go to bed. Maybe I could not sleep. I'll keep thinking about my trade. I don't know whether what's thing gonna change the market, right? So I will close my position before I go to bed, before it takes overnight. And also, like, we really don't know what's going to happen next. See, for gold, right? Let's say we are doing a short. Let's say now, touch wood, like we have the war in some place in this world. For example, in the Russia, and maybe Russia and bombarded Ukraine. Okay, this is just an example. And then maybe gold shoot up, and then I will lose, right? But due to I set my TP very tight, so at least I still can protect my capital, so can protect my fund. Okay, so the idea behind it is we spot the signal, we open a position, and we hold it for longer, but within a day. It's kind of like a scalping. Okay, so again, the advantages will be quite similar to scalping. Allows you to find these opportunities, spot some signals, and then in a short-term price movement in the market, and you can be profitable quickly and has a potential to generate income on a daily basis. This is, you know, like when you have experience, you know, if you trade several years and then you have a very promising win rate, and you can, you know, actually be a full-time trader. You can make this for your living. And also you can use leverage to amplify your position. So for example, like with PU Prime, we can have like 500 leverage. So you can just use a little bit margin and then make huge profit if you can advance in this field trading strategy. And the disadvantage is not all asset classes are suitable for day trading. For example, here, just now we always discuss the trading strategies with gold, right? Let's say here, if I use this dollar, if I open it with a shorter time frame, just example, and then if I spotted this thing, I always see dollar, they have a very strong resistance here, touches here and then drop, touches here and then drop. So this round, if I see it touches here and then I want to do a short position, right? Maybe I'll open a position here. This is a long position, sorry. So I'll open a short position here maybe, because just form, right? So I open a short position here and then I'll set my TP not too tight with the resistance level. I give some buffer for it to fluctuate. And then here, because previously it touches here and rebound, right? So I spot this and then I open my trade like this. Okay, it sounds like a good plan. It seems like a good strategy to use, and then it actually hits my TP and then I can make money. But what I want you to see is you can see the position only allowed me to earn like 16 pips. And if you compare back to the gold with a higher volatility, higher fluctuation, you know, if we are talking about few hundred pips in 50 minutes in 1 hour, but for dollar, it's just like 10, 20 pips. Okay, so it's not worth it for you to trade with a very small volatilities as a class if you opt to use scalping strategy and also day trading strategy. Because if you open the position for a day from early morning of your time, you open a position until before you go to bed, you close the position, maybe you're just making a few pips. Okay, so not all asset classes are suitable for scalping and also day trading strategy. And this also again required high discipline. So it's for you to defeat quick. Sometimes when you know watching on the price movement, watching the price performance, and then you see is going to hit our stop loss, and then we don't want to lose. Maybe some of us, we will try to tune the stop loss, we go lower because we're afraid of losing, right? And we all know that this is not right, but we are human. Sometimes we have sentiment. Sometimes we cannot control our emotion. And also TP, when we see that the market is very strong and then it's going to touch our TP, maybe we are greed, we want to earn more. We set our, we change our TP, we set a higher, but maybe end up we cannot take profit and then the trend reverse. Okay, so bear in mind we require a high discipline if you are adopting stopping and day trading strategy. Okay. Moving on, we're going to talk about the swing trading strategy. So for swing trading strategy, it requires you to have an extensive knowledge in the financial market, and then maybe require you to have a bit of experience in the market. Because why? Because this strategy required you to hold your position for more than a day. So up to a few weeks or even few months to capture the whole trend. Okay, because this kind of strategy, you will use a little bit of the fundamental. So we have to know a bit of the news. We have to focus on this macroeconomic event and see what economic data is going to release, who is going to give a speech, give a talk. Let's say Jerome Powell is going to have a speech, and then Christine Lagarde is going to have a speech, which the speech will have an impact on dollar and also euro respectively. So we have to know the fundamental plus technical. Why? Because before we enter the trade, we have to spot the signal, and then so you have to plus these two, the news and also the technical analysis, to use this swing trade. So yeah, fundamentals, economic data like CPI. So CPI released yesterday. So if you follow the news, you follow the market, when the CPI data release, it actually hammered the dollar to trade lower, because the CPI, the inflation is lower, softer. So people's going to bet that the Fed is not going to increase the interest rate. And then for tonight, after we finish our webinar, the FOMC is going to announce their interest rate decision. So I expect that this will also give an impact on the market, especially for gold, for dollar, and those dollar-related asset classes. Okay. So again, I'll just use TradingView, and then because for using string trade, we will use a longer time frame, maybe let's say in 1 hour. I will. Okay, 1 hour. So for example, if you spotted this, okay, you see there's like a very strong support level here. Okay, when the gold always touch here and then rebound, touch here, rebound, touch here, rebound, touch here, rebound. So let's say if if I spotted this earlier, okay, see, I say touch and then rebound, touch and then rebound, touch and then rebound, and then earlier on, when you see touches, maybe I can try. Okay, maybe I'll try and then I'll open a position here. I'll open a long position here, and then I'll give some buffer. Of course, we are not going to stick very closely to the resistance point, right? And then we see roughly there's a very strong resistance for the gold. And maybe we can have the TP here. See, so this trend, if you successfully hit the TP, will make you about roughly more than 2,000 pips. Okay, And then we really don't know like how long it takes for the trend to hit your TP. Maybe it takes just few hours or even takes few days or sometimes take few weeks. But if you look on the macroeconomic side, we can see that actually the trend for the gold will not be strong. Why? Because now we know that the S&P, the Dow Jones, and Nasdaq is so strong. People might rush into this will focus more on the equity market. And then when the economic is good, because now Fed say going to maybe because of the CPI data, maybe we say, let's say Fed's going to stop raising interest rate, and then in a way you will boost the economy further. So basically now people will just omit the gold, because at the moment we don't need this safe haven asset, let's say. So if you have this in mind, maybe in the long run you see that it gold have a lower low. It's always have a lower low. Lower high, lower high, lower high, lower high. So what we can do in another way, if you don't want to catch a rebound here, we can wait until the gold to rebound until certain place, and when it start to have a trend reversal, and then we can start a position here, a short position, and then wait until it drop, or even if let's say it can successfully break this resistance, it will be a very strong bearish signal for gold. Okay, this is just an example, yeah, because I wouldn't know what's the Fed's going to say later on, what decision they're going to make. Okay, this is just an example. So either way, because everyone look at the chart, look at the same chart, but everyone will have a different explain on the chart. Some will see a rebound, and then some will wait for a short signal. Okay, so yeah. And then another example will be dollar, because just now we talk about CPI, and then we talk about the Feds, right? And we know that the interest rate will have a very strong relationship with the currency. So in the case of the Federal Reserve, will have a great impact on the dollar. So let's say if the Fed say going to post the rate hike later on, and we all know that this will be very negative news for the strength of the dollar, and we can have a swing trade. We can start a short position here. Okay, and then here we can see this line is a very pivotal level for the dollar. See, it touches here, and drop, and then touches here, and rebound. So if let's say if you open a position here, we short it, maybe we can set a TP here, and then here is a strong resistance. So maybe we will set a stop loss here. Okay, so this one is like a longer time frame, and then we really wouldn't know successfully if let's say we are right, and then we are doing the right thing, and then really the trend start slowly moving down. But we really don't know, because like the market's sometimes going to move like this, and then from here to here it takes about maybe 1 week or 2 weeks or 3 weeks to hit our TP. Okay, so the idea behind the swing trade is like this. We look at the fundamental news, we look at the macroeconomic data, and then after that we apply to the TA, and then we see any nice entry point for us to open a position, and then we start to trade. Okay. The advantage for the swing trade is it will be less stress. Doesn't require you to stare at the chart all the time, because why? When we open this position, there's it's back with the fundamental analysis. We know what's going to happen in what is happening in the world. We know the logic behind our trading, so we'll be more confident when we open this position. We not required you. It doesn't require you to keep monitoring the price movement every minute, every hour, because like I say, if you adopting this swing trade, it takes like few weeks or if sometimes months. So it doesn't make sense for you to keep monitoring it. But of course, sometimes you need to pay attention to the news, and then also any big changes in the market. Okay, and also another advantage is it will be lower transaction cost if you compare to scalping and also day trading, because like scalping, because it's a very small time frame, short time frame, so you can actually spot a lot of chance, spot a lot of opportunity for you to open a trade. And then sometimes, let's say we are, our hand is itchy, we really want to trade, we can open up a lot of trade in a day. So, and then we need to pay for the spread, right? So add up, will be a lot, but not in the case for a swing trade. So lower transaction cost because the position are held for a longer period. And it will be a better risk management because we are back with fundamental analysis, and then we use a longer time frame. So longer time frame actually allow you to cancel out some of the noise, right? So it will be a better risk management for you. The goal is to reduce your trading emotions and focus on risk control, and also at the same time maximize your profit. The disadvantages here is a longer exposure in the market. So example, like you were holding let's say dollar, and then previously, because it was good in last month, remember when US are having this debt limit crisis, and then people would think that if the treasury yield is higher in the US, and it will lead to a higher interest rate. Will result in a stronger USD. So, so if you hold USD for a few days, for a few weeks, and then the news hit, say, oh yes, the bill is passed in the Congress, the debt limit bill is passed in the Congress, and then hits the dollar drop. So you see, if you hold it for a very long time, you're exposed to a greater risk. And also this is the same, is involve overnight risk because you hold it for several nights. So you really don't know what's going to happen, while you are sleeping. Anything can happen. Maybe there's a war, or someone else come out to say something that will have a great impact on the market and such. And thirdly, this is not for, I would say, not for everyone, unless you learn how to trade, and then you equip yourself well. You have to have an extensive knowledge in the financial market, so it requires you to have a significant understanding for the market. So you have to know the logic behind every price movement. What makes this happen, what makes the dollar strong, and then what makes the dollar weak, what triggered the goal to go uptrend, and what triggered the hammer down the goal to trade lower, things like this. Okay, so basically it's not for beginner, for this swing trade strategy. Okay, the last one will be this position trading. So position trading will be the most extreme here. So for us, for forex trader, is we don't really use this, because this one is take a very, very long time frame. Is from weeks to months, half a year, until the entire trend, your goal is hit. Okay. So this one is more towards, maybe you trade on equities, you trade on index, because for forex is a very fast moving asset class, and then it involves in a lot of pips, like a few thousand, tens of thousands of pips. So if you hold this for long, at the end will be very stressful as well. Okay, so using this strategy, position strategy, require you to focus more on the macroeconomic. We have to know what kind of monetary policies that the government is adopting for the long-term geopolitical risk, for example. So maybe the relationship between US and China, and the relationship between the Russian and the European country, things like that, etc. Okay, we have to know what is CPI, what is PMI, and then a lot of economic indicator, and also we need to withstand the short-term market volatility, because we know that in the long run, market can go in a different direction for you, and then you have to endure it, and then until your long-term goal is hit. So a good example again will be, first of all, the dollar. Let's say in the past, let's say in last year, in 2022, when US inflation is very high, at one point it even touches double digit. So, and then the Fed come out and say we will have a very hawkish monetary policy. Hawkish monetary policy means that they will increase the interest rate aggressively. And we have this financial knowledge. We know that interest rate will be highly related to the strength of the dollar. So increase in interest rate will boost the strength of the dollar. So maybe from here, early, since March of 2022, you will already start a position here. And maybe your target will be 100, 110. And your TP will be here, 110, and only you will take your profit. So how long does it take? From March until 110, until September. So it'll be half a year of time. So it's very much rely on the macroeconomic, very much rely on the fundamental analysis. And what's next? Just now we discussed. We're talking about the inflation in the US is now under control, is being tamed. So from early on, like 10% for the in CPI for US, and then from yesterday, the latest economic data is only 4%, and we know that the targeted inflation rate for the US will be 2%. So it's very close to it now. And we also know that now the market keeps saying, urge the Fed say, stop to have this very aggressive interest rate high. It's going to harm the market. It's going to harm the stability of the financial market. So maybe we really do not know what's the Fed's going to say later on, what's the interest rate decision they are going to make. Okay, but let's say Fed say, okay, here this is it. We're going to post a rate high, and then we are not going to increase interest rate from now on, ever. And then maybe the market will expect the Fed will start cutting rates at the end of the year. Maybe from September onward, something like this. And maybe we can open a position here. We can short the dollar. We can short maybe until 96, let's say, for example, from 100 and for 102 until 96. But how long it takes, we don't know. Maybe in a month, maybe in 3 months, maybe again in half a year. Okay. And another example will be the US oil. So now we know that oil is trading, in a very sluggish manner, and is being supported at around $67 per barrel. So let's say now we have the news to say that Fed's going to post rate hike, and maybe later on start to cut the rate. And actually, this is the real news. China government, they already announced yesterday on Tuesday, they say they're going to further cut the deposit rate. So in another word, the cost of borrowing in China will be lower. So encourage more economic activity. So in a way, will boost the demand for oil. And we also know that China is the top oil importer in the world. They import most of the oil in the world. Yeah. So this one maybe will be a very good news for oil. So let's say you want to open a position here, and you are very confident the oil in the future going to hit up to $100 per barrel. Yeah, but again, we really wouldn't know how long does it take for the oil to hit $100 per barrel. But we can open a position here until we hit our goal. It is a very, very long time. And also another good example would be the UJ pair, the Japanese yen. So we know Japanese, the BOJ is the last in the world, that keeping this very dovish monetary policy to have the inflation in the country, to have growth in the country. So they keep this the very low interest rate environment for more than a decade. And then since early this year, we see there's a signs of inflation in the Japan. Okay, so now the BOJ is still observing it, still monitor it. So maybe at the end of the year or even few months later, BOJ they're going to tweak their monetary policy. They say maybe they will start to increase the interest rate. Again, we know increase the interest rate will boost the strength of the currency. So let's say let's say the BOJ start to increase the interest rate, and then the strength of the Japanese yen will be stronger, and it will start to decline. Yeah, usually maybe it'll start to decline. And where you can see maybe you are very aggressive. You say maybe you would hit until 116. Yeah. So from 139 until 116. So it's roughly about 2070 pips. Yeah. This one is like a very long position is going to hold. So again, it's very reliable. It's very strongly rely on the fundamental analysis. And then when you start a position, you use technical analysis. Okay. So if you're trading on some other asset class, like really the stocks and like index, maybe you can use up to weekly and monthly time frame to cancel out all the noise. The advantage is you lower your emotional distress. The reason being because when you open a trade, it's not just purely rely on the price movement, not purely rely on candlestick or any technical indicator, any tools, because you are back your all your position are back with fundamental analysis. You know that there's no logic behind it, so will be less emotional. And then also it's the same, reduce your trading pressure. You're not going to constantly monitor the price movement. You're not constantly going to monitor the charts because it takes like months for to hit your goal, to hit your TP. So you only focus on the final target, capture the big trend, and then ignore the short-term losses. So these are the trading strategies that we're going to discuss, and then from there maybe you can see what kind of strategy suit you. So you are very good in making quick decision. You are good in trading under a very stressful environment. Then maybe you can go for scalping and also day trading. And then if you are you don't have time, you're just a part-time trader, you don't have like 24 hours to focus on the market, maybe you can choose swing trade. I would not recommend you guys to use this position trading because it would be too extreme, and then also involved in a lot of swap fees, right? Overnight fees. So at the end, the cost for such strategy will be very high. So it's not really suitable for trading forex. Okay, maybe on other asset class. Yeah. I omitted this. So the disadvantage for the position trading as well, I just about to say, is the opportunity cost. Because why? If you hold this position for a very long time, maybe let's say we have this 1,000, but 1,000 for you to using this day trading, using swing trade, you can change your position every week, change your position every day. But if you open a position with this position trading strategy, your fund, your capital will be tied up under one position. And then let's say you spotted other opportunity, but you cannot do so because you only have this limited fund and it's already tied up with one position. Okay, this is the opportunity cost. You'll miss out other potential opportunity. And also sometimes when it takes very long time, it will be emotional for you. sometimes your mood change, your emotion change, and then the way of you seeing things change. So whether or not to keep the position, or you close the position, is allow you to to be very rational sometimes, and require you to have higher capital as well, because your capital will be tied up for a longer period, so it require you to have a higher capital. And then also the fluctuation between the period will be very big, so sometimes it cause you to stop up. So when you stop up, the loss will be greater as you compare to day trading or even scalping. So for scalping, let's say your stop loss, you just lose out by 50 or 100 pips, but maybe for position trading, you're losing like 1,000 pips or more than that. Okay. Yep, so this is the end. Thank you guys, thank you for joining us.